Hi, this is Alessio. Hope you're well. In this video, we're going to take a look at the crash in airline stocks, and we're going to ask the question, is it quite possible that a lot of these airline companies could eventually go bankrupt? And what could this mean for the airline industry as a whole? So we're going to take a look at what's happening in the crisis right now with how people can actually even sit in an airplane and whether these companies can even remain profitable, and could they actually crash even further in the near future. So we'll take a look at that in a few minutes. Before we do that though, let me just mention this. As you can see here, this is Flight Radar. It's actually on a website called flightradar24.com. And you'll see that today, actually as I'm making this video, there are hardly any airplanes right now over Europe. I mean, you can see what the actual crisis has done. And if we just actually go to our friend, the United States, so the US here, let's just move across the pond, across the Atlantic here to the US. Yeah, as you can see here, also quite a few number of airplanes. I mean, fewer than normal. Usually you would see this entire map being filled with airplanes. So as you can see, the entire industry has been affected. Now, in a few minutes, I'll come back and I'll show you what this chart here potentially means for the airline sector. Before I do that though, there was an interesting video from a channel called Mentour Pilot. By the way, if you haven't watched his videos, Mentour Pilot, I do recommend watch the videos on that channel. The guy who makes them, I don't know his name, but he's a fantastic guy and is also very knowledgeable about the airline industry and what's happening right now with airplanes and pilots across the world. And I have to tell you, the picture right now is not very good for our pilots and our air staff out there. So let me just play for you a very short clip of what he just said recently.
So this would indicate that social distancing, especially within an aircraft, is going to be much more complicated than just taking away one seat. If you would go with the CDC recommendation of taking away every passenger within 6 feet, well then, instead of taking away one seat per row, you need to take away between 7 or 8 seats. Now, those of you who are skilled in maths will notice that if you take away one seat in a seat row with 3 seats, you take away about 33% of the passenger capacity in an airliner. And in order for an airline to break even, to start making money, you need to have a load factor of between 75% in the really effective airlines, up to maybe 85-87% in the ones that are less effective. So by taking away 33%, you are effectively making it almost impossible to make any kind of money without increasing the prices steeply for the passengers who are still traveling. And if you wanted to take away, to give the 6 feet rule, it is impossible to continue an airline. And this is exactly what, for example, the CEO of Ryanair went out and said during the week. He said that if the rule of taking away the middle seats is enforced, Ryanair will just not fly because it's not financially viable to do so.
So guys, as you heard there, Mentor Pilot's absolutely right. There's no way a lot of these companies can remain profitable if we're going to do this social distancing rule, 6 feet, 6 seats apart, things like that. Now, I have to tell you, I do feel sorry for the pilots that have been laid off work right now, pilots and air staff being laid off work. But let me tell you who I don't feel sorry for. A lot of these airline companies. In fact, let me just show you this. As I'm sure you've heard, a lot of these airline companies have had massive bailouts, billions of dollars in bailouts. Here's one example. United Airlines just got a bailout of $5 billion, okay? And get this, not only did they get a bailout, so not only did they get their billions of dollars in bailout money, and they still have the audacity to lay off workers. Look at this. This came in the news just recently. United Airlines tells staff to take 20 unpaid days before October and will lay off 30% of them. So, it's just so rich, isn't it? They take the taxpayer money and they still lay off their workers as well. So guys, that is just typical corporate socialism. Just remember guys, as I mentioned to you in a previous video, Wall Street does not care about capitalism. Wall Street lies when it says it's pro-capitalism. What they really want is corporate socialism. Socialism for the rich, not for the poor. By the way, Mentor Pilot was saying in his video, most recent video, that some of these airline companies could go bankrupt. Okay, so it's possible some of the famous names out there, I don't know which of these could go bankrupt actually, but we'll take a look at the chart of some of these in a few minutes. But it's quite possible that a few of the airline companies that we've heard of so far, some of the legacy airlines, could eventually go bankrupt in the very near future. So I do feel sorry. I have to tell you, I do feel sorry for the pilots out there, because I do know we have some subscribers and viewers who are pilots, and I do feel sorry for the airline staff as well. But the people I don't feel sorry for are the corporations, who are just absolutely greedy and disgusting in their behavior. Anyway, let's take a look at the charts here. This is American Airlines, and by the way, this is a chart of jets. So the reason I'm looking at the chart of jets, because this is the ETF for the airline sector, the airline industry. So I highly suggest you keep an eye on this sector, on the industry as a whole. You'll see the sector, the ETF here, has dropped significantly. And you can see, by the way, let me just show you this. Notice that while the airplane sector, the industry, has just been doing nothing for the last few months, just been going sideways in a consolidation pattern. But look at this. Notice the S&P has rallied over 30%. So we have seen a 30% rally in the major stock markets, but hardly anything for the actual airline industry as a whole, as you can see here. Which means what? I'll explain to you what this means in a few minutes. But if you just take a look at the chart of airplanes, like, again, airlines like American Airlines here, absolutely getting destroyed, as you can see here, and hardly any kind of a major recovery rally. No recovery rally at all. And just take a look at United Airlines. This is UAL. Yeah, UAL, very much the same kind of pattern. Hardly any kind of recovery so far. Now, let me just say, the biggest mistake someone can make right now, the biggest mistake a trader can make, is to think that these stocks are about to bottom. They're not. I don't think it's likely that these companies or these airline stocks have bottomed. So here's the reason why I think airline stocks could go and crash much further lower. Because notice that while the S&P, while the major stock markets have managed to recover and rally by about at least 30%. Now, as you know, this market is not going to continue rallying forever. Eventually, we're going to have a retracement. So any kind of a rally, like we're seeing here so far, eventually is going to see a pullback, a retracement. Okay? So, by the way, let me just be clear. I'm not expecting a drop on the stock market back to the lows of March. Okay? For a reason I've already explained in previous videos. So, unless I get the kiss of death sell signal, which I explained to you in a previous video, I'm not expecting a drop back to the lows of March. But I do think we're going to get a retracement. A retracement to that rally is quite possible and quite probable. So usually in rallies, as I'm sure you've seen before, often we tend to retrace back some of that rally. So what does that mean? It means that if you just go back to the chart of jets, so this is the ETF for airlines, it means a lot of the airline companies, probably most of them, will probably fall below the lows of March. The reason why I think that airline companies will fall below the lows of March is because they've underperformed. Notice the massive underperformance by airline companies relative to the stock market. That means the majority of airline companies, again, jets and indeed American Airlines, will likely drop below the lows of March. So that means we have a couple of options. That means that in the short term, in the next few months, we could be looking at shorting some of these particular airline companies like American Airlines or United Airlines, probably shorting at any rallies into resistance. We'll talk more about the strategies we could employ for shorting in tomorrow's members video. But also take a look at this chart here. This is the monthly chart of the American Airlines. So this is a monthly chart of AAL, American Airlines. Here's why I'm not looking to buy airline stocks right now. So I know there's some people thinking, well, right now they're cheap, potential good value, right? Actually, I disagree. Again, as I've explained, while the S&P has rallied over 30%, most airline stocks have not done anything close to that, which means that once the S&P has a retracement, then that means most of these airline companies will be dragged down with the stock market. And that means as far as AAL is concerned, American Airlines, this is AAL, and notice the price right now is about $10. I think we could see this stock eventually dropping down to the lows of 2008. Take a look at this, guys. This is the 2008 lows, as you can see here. In fact, let me just do a different color for that. 2008 lows were about $2 and $4 approximately. Okay, so notice we got support. This is the 2011 lows. We got support at $4 and $2. All right, so I think eventually that is where AAL very likely is going to go. So on the balance of probabilities, I would not be looking to buy airline stocks right now. I'd look to buy them at support. In other words, any major moves into, for example, the lows of 2008 or 2011. Okay, I think the 2008 lows are more likely. As far as American Airlines are concerned, we could drop down again to these lows, the lows of 2008 and 2011. That would drag it down to the $4, $2 mark. Let me also mention this. Mentour Pilot mentioned that some of these airline companies could go bankrupt potentially in the next year or so. All right, so we've got to be careful here. So I wouldn't risk a lot of money into these airline companies because they might go bankrupt, and we don't know which of these could go bankrupt. But let me also mention this as well. If a stock were to go below $1, okay, please don't be tempted. Okay, be very careful, because some people think that if a stock goes below $1, that means it's good value. Actually, once a stock goes below $1, I mean, this particular stock here was at $60 only about a couple of years ago. If this stock were to go below $1, or actually any stock that goes below $1, be very careful, because that is a warning that company may go bankrupt. All right, guys. So please don't be tempted to think that just because a company is below $1 in its stock price, that is good value. Actually, it might be dangerous. Quite likely that company may go to zero, as I found out myself, by the way. I found this out the hard way 20 years ago when I invested in the .com stocks. All right, guys, so don't make the same mistake I made 20 years ago. If this video has helped, please give it a thumbs up, and I'll see you guys in the next video. Thanks a lot.